Good evening, everyone. My name's Gemma Green. I'm a co-founder and the chairman of Powerledger. Good evening, Lee. We're really delighted to host this event as part of the West Tech Fest this evening. I'd like to start by acknowledging the Whadjuk Noongar people and pay my respects to their elders, past, present and emerging. I'd just like to say thank you all for coming here tonight. We're looking forward to what I think will be a very interesting conversation talking about the current state of blockchain and the future of blockchain. Hopefully for you all, there'll be an opportunity to ask some questions as well and hopefully get some answers from the panel, maybe. We'll see how we go. I'd like to just firstly acknowledge the sponsors for West Tech Fest. The initiative has been led by Curtin University, and a lot of the success of West Tech Fest is a result of their sponsorship over the last several years. In fact, it's 10 years for West Tech Fest, and we've got Paula Taylor here tonight, who is a co-founder of West Tech Fest. Hi, Paula. Congratulations. It is the highlight of my year, particularly now that we can't go anywhere. But in any case, it's always been the best way to finish up the year for me, and really excited to go to Rottnest on Friday as well. Other sponsors are the part of West Tech Fest. We've got the City of Perth, and we've got some people from the City of Perth here tonight. Lovely to have you. The State Government of Western Australia and SpaceQ, and many other valued sponsors. We really thank you for your support. And I'd like to also acknowledge distinguished guests we've got here tonight. Larry Lopez, lovely to have you. And without further ado, I will introduce you to our esteemed panellists. Very exciting. Firstly, I'll introduce our panellist who's joining us remotely from Sydney. We've got Dermot O'Gorman, who's the Chief Executive Officer of WWF. Hi. Can you see the room?
Half the room, indeed.
Half the room. Well, there's about 100 people here. Dermot has been a leader in sustainable development for over 2 decades across Australia, the Pacific, Asia and Europe. He's got a keen interest in the uptake of digital technologies for sustainable development, and he's been responsible for driving major innovation solutions, including the development of WWF's first joint venture with BCG Digital Ventures, OpenSC, which is a blockchain-enabled supply chain traceability platform. Please give me a round of applause for Dermot. And our next panellist is Tracy Plowman. And Tracy is the COO of Bamboo, which is a cutting-edge cryptocurrency app. With over 15 years' experience in senior management, Tracy has worked across a range of industries before becoming immersed in the crypto sector in 2017, never to return to the mainstream sectors. Tracy is also the host of Crypto Curious podcast show and hopes to motivate more women to become active in the crypto market. Please join me in welcoming Tracy.
Hello, everybody.
Our third panellist is Karis Campbell, and she's the Corporate Product Manager for Binance Australia. And we've also got the CEO of Binance Australia here tonight, Lee Travers. Welcome. And Binance is Australia's leading digital asset exchange, and Karis creates and manages Binance's Australia product suite roadmap, focusing on the growing demand for corporate and institutional clients. With almost a decade of experience in banking and technology, sales and wealth management, Karis has also worked for Macquarie Group and its $100 billion plus wealth management platform, and worked across Macquarie's digital transformation projects. Please join me in welcoming her. And last but certainly not least, a woman I know well, Anya Nova, from Powerledger's blockchain development and staking operations. Anya was the recipient of the 2019 Australian Blockchain Leader of the Year award, and she's also presented at premier blockchain and energy conferences around the world, including at Consensus in New York, Event Horizon in Berlin, and the World Energy Congress in Abu Dhabi. But most recently, she's just been based here in Perth with me. And at Powerledger, Anya is driving the development of our blockchain and staking operations. Please welcome Anya and all of our panellists. So I'd like to start by asking the panel a few questions about the current state of play. Karis, I might start off with yourself.
Thanks.
You mentioned to me recently that about your own DeFi experiences. Perhaps you could share.
Going straight in there.
Straight in. I was talking to Gemma last week and I was having a little laugh because I wanted to stake a coin. I won't say which coin because I legally can't provide financial advice. Don't worry, Lee, I'm not going to do that. So I needed to stake those coins, but I needed to buy Avalanche in order to do that. So I jumped on Binance because it's got, the cheapest fees and the deepest liquidity pools. So why wouldn't you go anywhere else? Thank you. And I bought AVAX. I then transferred AVAX to my AVAX wallet. I then had to take it off the main chain, put it to the C chain, then transfer it to my MetaMask. But then my MetaMask was stuck to the Ethereum main chain. So then I had to program that. Once I got that into my MetaMask, then I went into a decentralized exchange, swapped it for this coin, and then I jumped on another website and then I staked it.
How many people have you lost?
So kind of the joke I was saying to Gemma was that sometimes you get so stuck in this DeFi world and you think everyone is on the journey with you and you're like, oh, this is completely the future. But we are still very, very early on in the stage as well.
Thank you. So how many people followed what she just said?
Yes, nerds.
Quite a lot.
I mean, the thing that I loved about it was that there's someone on YouTube telling me exactly what to do the entire time. I'm also trying to get some issuer-sponsored stock and sell that in my broker at the moment, and that's a pain in the butt. So TradFi isn't quite perfect yet either.
Well, what would you say are the biggest trends in DeFi that you've observed this year, apart from getting lost in the rabbit warren?
Yeah, I think there's just this massive push to kind of move away from institutions, and we're seeing this shift into this decentralized finance where the control is in the hands of the individual. So, there's this whole journey out there at the moment around, perhaps coming bankless, perhaps leaving your bank for good. And if you haven't picked up, I come from a TradFi background, right? But as we see in the future, I think these two worlds are really going to come closer together.
Could you say a little bit about what TradFi is for those that...
We love acronyms in any financial institution, I think. Traditional finance, TradFi, DeFi, decentralized finance. You get the picture.
And when we chatted the other day, you were saying about young people, particularly millennials, have different things that are important to them, and that's reflected in the trends that you're seeing in the DeFi market. Maybe you could share a few insights from that.
Yeah, I think one of the most wonderful things that I've seen over the last decade of being in finance is this change in my generation. So millennials and Gen Zs, there is a massive shift now for us to look at investment. And investing has become cool, and it really was not cool when I did my bachelor's. And so we have crypto to thank for that. We have actually Robinhood probably to thank for that, whether we like them or not. And it has changed the conversation and it's changed the culture. So now my friends, we speak about income, how much we're getting paid. Watch that, Lee. We think about where we're investing, and we're thinking about debt, and we're talking about debt a lot as well. And that's a real culture shift. It wasn't too long ago that talking about debt, talking about how much you earn around the dinner table was not okay. And now that's changed. And so think about this whole new generation coming through with higher financial literacy. What's that going to do to the market? Well, I bet your bottom dollar it's going to shift it.
Great, thank you. Tracy, do you have some insights around the trends for this year? What have you noticed? What are you observing?
In DeFi or in general? I guess going on from what Karis was saying, it's the youth are looking at crypto, I think, and we're talking about that generational shift. And if I look at how we're learning and we go back, say, 20 years ago when I left uni and I looked at where I was going to place my money, I went to, say, my parents or, people who are a lot older and wiser than me to talk about where I would place my money or where I would invest. And now when I look at my nieces and nephews who are of a similar age, they're getting all of their information through their phone. So they're looking at Instagram or YouTube, or they're looking at podcasts, listening to podcasts, and they're finding it all there in front of them. It's all right there, all that information straight away, easy to access. So, it's very easy for them to make their mind up very quickly. And at the moment, I think crypto is there. Crypto is right in front of them. And, I've lost my train of thought, sorry.
We were talking about young people.
Yeah, and I think that generational shift as well. And I think crypto at the moment, like it's $1 trillion asset, isn't it? I think we've just dropped maybe $1 trillion in the last 24 hours. But I think traditionally, like I was saying, sorry, I've lost my train of thought again. I'll defer the question over. Harris?
Hello. Hey. There is this cultural underlying shift. So we spoke about debt. Jump on Instagram, jump on TikTok, and you can follow people on their debt-free journey. This is a really big shift. And sorry, Carl, but I know he's a financial advisor at the back. I'm going to pop him out. There's only so many people that can go out and afford financial advice. And he's an amazing financial advisor. So, see him at the back. But we have to think about how that's changing within my generation.
And I think what I was also getting at was with these younger people looking at people on Instagram who are the same age as them. So if you see someone that's the same age as you, that's maybe telling you information that has perhaps just gone through and done a Bachelor of Science, or they've done an economics degree, and they are now there letting you know, how to invest in the stock market or what an ETF is, and they're there explaining that to you in their own terms, that's someone to listen to, and that's someone to get information from. And it's just, it's broadening your horizons.
Do you think that along with the broadening of horizons is also greater exposure to risk? So a lot of people may not understand leverage, for example, and may see those sort of Instagram stars and want to be like them, but also expose themselves to more risk than they appreciate at the time?
I guess so. And then crypto is an industry of risk, I guess, isn't it? That kind of comes part and parcel. And there was an article, I think just last week, that the Financial Times was talking about these young influencers, saying that, do they bring a bit of risk with them, I guess? And that's where they just need to precate that they aren't all financial planners, and then what they're saying is just a bit of advice. And you need to understand that if you're taking advice from somebody that's on Instagram or on YouTube, then you can't take that verbatim. But I think that the youth of today are very technically savvy. So, they are maybe not as understanding of the banks back in the day, and they, being technically savvy, they want to invest in technology, and blockchain is that technology, the smart contracts and your DeFi. So they're willing to take a risk and take a gamble. So when they do see things like, Shiba and Dogecoin possibly going 10x or 1,000x, they're willing to maybe take a chance on something like that.
Can I add to it? Oh, no.
You may.
Oh, thank you. Because sometimes we think about this, sometimes you get the questions around, someone's just gone and bought a JPEG off a rock. What on earth are you investing in that for? And I love that question. Ether rock NFTs did sell for millions of dollars. And when you look at these assets, you go, my God, they're so risky. How's anyone going to invest in that? But the reality is that the people of my generation are investing in pieces of culture. It's communities of what they understand and what they like. And so I feel like I could make the same argument of, going out and buying a Rolex watch or a Audemars Piguet watch that Lee likes. I think that's ridiculous. Who doesn't like that watch? They completely butchered it. Yeah. Sorry. Expensive watches. As you can see, I'm not in that community. And I think that's crazy to go out and spend that much money on a watch. But when I'm in Discord and I see other people with an EtherRock PFP or a Crypto Chicks or a, Crypto Punk, I go, my God, that's so cool.
You have to explain what those things are.
Oh, okay. See, this is what happens, right? I get lost in the world. So do we know what an NFT is?
Non-fungible token.
Hands up if you don't know what an NFT is.
Yes,
man.
You've got
See? One, yeah. What
this
have you
is
got
cool.
there?
He's got a crypto.
Is it a bored ape? Is it a bored ape? It's a bored
Nice,
ape.
bored ape. Nice. And so kind of what happens. Discord's a chat room where like heaps of nerds hang out, and there's lots of NFT projects. It's where they launch, right? But in those communities, there are different breeds or different brands, the same way we have Rolex or very other expensive watches, which I can't pronounce. They become status signals. And so what happens is the same way that, I'm going to pick on Lee because I got told that picking on your boss in public's really good for your career. Like when Lee goes out and buys an expensive watch that he has, he doesn't, okay, but he might. Or a nice car or something along those lines. You go, okay, well, Karis, you've just gone and spent the equivalent on a non-fungible token, which is really just a JPEG, which anyone could right, click and save. So people go, well, why on earth would you spend that money on that? The reality is the value placed on a watch, I would say, or any luxury good is digital. So yes, it tells the time. There might be gold in it. There might be diamonds encrusted in it. But I would say the majority of that value is actually digital or signalling value. And it's going to you and other people in your community that likes watches or cars to go, hey, this is really cool. People in this community understand you. And it's the same thing when it comes to my generation of investing. We understand and know other people because we're in that space. We get the memes. We understand the coins and we understand the NFT projects as well.
Thank you. We're going to chat briefly about new chains, and then we're going to talk about tuna. Anya, what have you noticed this year about new chains? What have you been observing?
Well, I suppose everyone's really well familiar with Ethereum, probably still everyone's favorite chain, almost been a bit of a victim of its own success, just with the popularity of different projects raising funds on it. The transaction fees have gone up so much. I think I've seen the highest transaction fee so far. A couple of days ago, I was just playing around with a token generation contract, and it gave me an estimate of $27,000 as a transaction fee. As you'd imagine, I thought, no, thank you, I'll wait. But even for simpler things, maybe bridging or staking, I have paid close to $200, $400. So right away, that kind of ecosystem alienated lots of people, and things that we want to do lots of transactions for, gambling, casinos, trading, you just want something really cheap. So a number of chains came up, things like Solana, Avalanche, I think been mentioned, Terra. So these are all the chains that produce genuine innovation. So they have built on what is there, and they have introduced something new. For example, Solana introduced proof of history. Means that there is a clock within the blockchain that has never existed before. So validators don't have to align on when the transaction has occurred. They just only have to align on the fact that transactions have occurred, saving lots of time. So, much faster throughput, each chain optimized for something else. I think that's super exciting. We're going to see an explosion of DeFi. These are, standalone chains, and then we have the layer 2s, such as Arbitrum or Optimism, which are Ethereum compatible. And I think Binance has actually recently enabled support for Arbitrum, which I think is just fantastic. It's probably going to be one of the winning chains because of that. So layers 2, they don't use validators or miners. They piggyback in on the Ethereum security. And every 10 minutes or so, they might stamp the net balances of everyone's onto Ethereum. So where you win on the transaction fees, it could be cents or maybe $1, you lose on, if there is a dispute that might occur in that window before it is actually validated on Ethereum itself. I think another interesting thing that happened is because all of these new chains are proof of stake chains, that excited everyone in terms of, I'm going to earn passive income, just going back to the, the conversation we're having about investments. And I would say that, passive income is not the same. It really depends on where you're getting it from. You're either contributing to the security of the blockchain and getting paid for the genuine expenses you had in terms of electricity, Wi-Fi, hardware, or you're actually participating in something that wants to associate themselves with staking. Could be, there are all these DAOs, all these yield kind of projects that came up, that really it's a smart contract that you put in 1,000 of something, you take out 5,000 tokens or whatever that might be. So they really have no reason for existence, no use case, no business behind it. It's a bit of a pyramid scheme, but I think there is a lack of awareness between the genuine proof of stake and those kind of yield projects, and people get a bit caught up in 50,000% interest per year, and maybe forgetting that it's the interest measured in tokens, not measured in fiat. So after the marketing effort is gone and there is nothing behind. Like, let's not forget Ethereum is a major and successful business. How many transaction fees they're collecting per day? So that is a real business. But all these other projects, they tend to not have anything there really besides the hype. So once that hype is dead, your 1,000% APY in tokens might translate into minus 20% in real dollar terms. But overall, I think the new chains are really exciting. We might talk a bit later about why Powerledger has considered changing the underlying technology from Ethereum to Solana. But one of the reasons is the advancement in technology over the last few years.
Can I ask, Anya, just really quickly your thoughts on the burning of Ethereum and how that's going and what your thoughts are with that, now that we're burning the Ethereum?
Yeah, well, I think initially when that started, there was actually no impact on the price of Ethereum, which was a bit surprising. But I think we'll see that contributing to the price appreciation. And I think my understanding of the, once the beacon chain is live, everyone who is currently staking and earning something going to also be able to also earn transaction fees, as the miners will be, a bit not necessarily pushed out, but it's probably the miners themselves who are going to transition to being validators. Oh, it's a big experiment.
Damn it. We're going to turn our minds now to the topic of tuna. This year, there was a project with WWF using the blockchain as a solution to track and trace tuna. Could you share a little bit about that project and why you've used a blockchain to do that?
Well, it actually starts, and listening to the panel talk about the evolution of blockchain and Bitcoin and crypto in 2016-17, we saw the potential to use blockchain to verify and create digital twins in supply chains. And so actually we tested this in Fiji in 2017 and managed to show we could track a tuna all the way from Fiji to New York. Now, the reason that we want to do that is twofold. First of all, the ability to create a digital twin that can verify how the tuna is caught and to be able to verify that it is caught in a sustainable way and it doesn't involve indented labour or slave labour is the first one. The second bit is the ability to reward producers for doing that and making sure that they're rewarded, whether that's through preference in supply chains or financial reward, and being able to get the reward back to the appropriate people, often in very complex supply chains that go all around the world. And so we have used blockchain, and I guess I'd probably stress here that the way that OpenSC does it is very much by doing it, stitching together with a wide range of other technologies. So Internet of Things, remote sensing, machine learning, AI, that enables you to verify and then place that verification onto the blockchain. And so having tested that in Fiji, we then brought it to Perth and tested it on Patagonia toothfish with a West Australian company called Austral Fisheries. They now have 15% of the world's total Patagonia toothfish catch on a blockchain platform like OpenSC, and that allows them to see that fish wherever it is in the world through the processing and right through into either a restaurant or into a supermarket shelf. And so I think that the potential of it to verify sustainability claims makes it a transformational tool to be able to solve what has been a problem in sustainability for 2 decades, where certification schemes, which are very paper-based and audit-led, can be replaced by a much more cost-effective and immutable system that can give a consumer in real time the type of information about where the product and how it was produced and where it moved around the whole supply chain to the place of purchase.
Amazing. And in terms of spearheading that project, have you been working on that since 2016?
Since 2016. So we started in tuna, we moved to Patagonia to fish. We now work on prawns, palm oil, coffee, dairy, and verify a whole suite of sustainability claims, either environmental or social in terms of human rights or fair payment for products in small scale producers.
Amazing. And what is on the cards next in terms of adding other commodities or rollout for broader adoption in the sectors you've just mentioned?
Well, I think since we started in 2016, there's been an enormous proliferation of startups, big companies that have seen the potential that blockchain can provide to supply chains. I think that the ability to verify sustainability claims is where we've focused as a startup ourselves. But I think that the potential, I like to think about it as we're going back 250 years. 250 years ago, you walked down the road and you bought a pail of milk from the dairy and you knew exactly which farmer produced it and which cows. In the next decade, you can go onto a platform and with the Internet of Things and blockchain, you can tell exactly which farmer produced that pail of milk and where, and buy that online, and one would hope pay for it in cryptocurrency as well. I reckon the panel might agree with me there.
Yeah, I think going forward to going backwards. Do you often get asked about, like, isn't blockchain like really energy intensive and unsustainable? Like, how do you counter that question when people ask you about using a blockchain solution to drive sustainability outcomes?
I think you always get asked that question, and I think that for us, we designed the blockchain solution to be very energy as effective as possible. So our platform uses probably the same amount of electricity as 2 staff commuting from Fremantle into the Central per year. So that's not a lot. You can offset that. However, I do think more broadly the emissions from broader blockchain and crypto and Bitcoin is a serious problem and is going in the wrong direction as to where the rest of the world is going in terms of decarbonisation. So I think that there's an opportunity there, but it needs to be addressed head on by the industry soon.
Great. I think we've got some panellists that are very keen to respond to that comment. Who'd like to go first?
Oh, sure. Well, I mean, I think most people think of proof of work blockchains, which was the original blockchain and that relied on using lots of machinery to solve complicated math problems. But I mean, that's, I think, the past. With the new incentive systems and proof of stake blockchains, where if you do something wrong, you actually lose your stake. I mean, they're, at least so far from what we've seen, as secure and able to secure as big of an amount of funds as not quite yet, but I think they'll get there. They'll be securing a large honeypot of money, and we'll find that just that incentive of losing your funds is enough to get people to arrive at a consensus properly. So that's obviously, one side of the equation is, and then you just looking at optimizing blockchain from then on. So Solana, for example, is pretty hardware intensive. At Powerledger, we have utilized Solana's code base, made a few improvements to make it less hardware intensive, where you just need a laptop with 8 CPU and you can be a validator. So that's a laptop that many people might have already. So it's really not going to be using more energy than if you used some Google services. You had a Gmail or a Google Drive account, Google Photos, something like that. And then on the back of that, it comes down to tracing, well, what is the energy usage of each particular validator or miner on the blockchain? Are they somewhere in an area where grid electricity is already coming from renewable sources, or is it only 30% renewable, in which case they can always buy renewable energy certificates, or they can install solar battery systems. I think that's the push, and just validating that the blockchain is using the correct energy source, the clean renewable energy source. There's going to be a place for, I think, to differentiate different coins. I've actually seen a coin.
Green Bitcoin, you mean? Like, how do you think?
Iris Energy.
Yes.
Iris Energy is pushing towards the green. Have you guys heard of Iris Energy?
Yeah, they just listed.
They're amazing.
Yeah, they're Australian company.
So they're, I think, doing it in Canada through hydro energy, which is amazing. I think that's a good one. I think in El Salvador, they're producing their energy from the bottom of a volcano. So it doesn't get any greener than that. You're mining your Bitcoin from the bottom of a volcano, which is awesome.
I think also you have to remember, if I went to Rob Lowe of the RBA and said, how much energy does it take to have an Australian-backed economy? Can you tell me that on the minute, every minute? No, there's no way you can do that. But if you jump online, you can see exactly how much energy is being consumed, just say for the Bitcoin network. That's very different. It wears its energy consumption on its sleeve, but it doesn't exactly tell you how that energy is produced.
And because of that, we are trying to be accountable. I think it's carbon neutral, carbon positive. Perth is another great company, working with a lot of companies here in Perth, trying to be accountable as well.
Great. What do you think the future holds for blockchain, Anya, around things like DEX, like distributed exchanges?
That's a great question. I think, interestingly, most people who get into crypto now, they do that via centralized exchanges such as Binance, Coinbase, and I think we all use them, but they really against the ethos of crypto.
Oh my God, how dare you?
But what I mean is that if you trace any crypto transaction, I use Binance, I'm a big fan, but if you use any transaction Etherscan, you pretty much can track it from wallet to wallet to wallet, and then you see it hits Binance and just goes into a black box. You have no idea what really happened there. You kind of have your fingers crossed that they have, my name, my balance listed correctly. They have their systems in place. And then once I need it back, I withdraw it. So I think there is, some speculation that some exchanges that are not as well organized or audited could be taking advantage of user funds. They could be lending the funds to someone earning the interest, not sharing that interest, or they might not even have the tokens that they're buying and selling. So I think a while back in the whole crypto space, there was one day a year where all the Bitcoin holders withdrew the Bitcoin into their wallet just to keep the exchanges honest, make sure that they do have the coins. Because for exchanges, it's really a matter of withdrawals and deposits rather than buy and sell orders for the users. And then, of course, there is the decentralized exchanges that came up with a model where you stay on chain the entire time, and all the transactions between buyers and sellers are tracked. So the big one there is obviously Uniswap, there's SushiSwap, PancakeSwap, all of that. And these, I think, unlocked this whole other DeFi ecosystem, I think, is really thriving because of them. Not only can you be a user, you can be a liquidity provider yourself. So you can be like your own mini Binance and take in the fees every time trading is occurred. Let's say there's lots of volatility. Well, I can actually contribute the coins to that pool and make money anytime a trade happens. So I think they have also suffered from Ethereum being quite expensive. So people haven't maybe been using them as much as they could, but Uniswap has now transitioned to Arbitrum and other cheaper chains. The interesting thing with the availability of those exchanges, those DEXs, is that what they mean is that almost anyone now can launch an ICO and a crypto project without a lot of technical knowledge, without a lot of prep work. You can probably decide to do an ICO and have a talk in the project in a month's time. So you can use those token generation contracts that I've mentioned. Straight away, you can have liquidity and start selling your token on Uniswap. Doesn't mean that you're a good project, just means that the technical barrier has gone way down, and there is now services where it's pretty much the whole thing is seamless for you. I think that's exciting, but definitely buyer beware.
Yeah.
What is it? If you haven't been rugged, then you haven't been in crypto long enough.
It's a hallmark of being in the game for long enough. Dermot, in terms of what do you see in the future of blockchain 5, 10, 20 years? What are your thoughts?
It's a really good question. To my earlier comments, 4 or 5 years ago, the understanding of blockchain was pretty much just tied up with Bitcoin. And so I think that it's evolved enormously, as the panel have talked about. So I think it's hard to tell, even in the next sort of 5 years, where it is going in great detail. I certainly, so I won't talk to the currency and trading and financial part to it, but I think in other applications, I see enormous potential in a couple of areas. Firstly, where there is low trust. And so I've talked about that in supply chains, but I think that applies to a whole lot of other platforms, like in verifying land and property, etc. The second one is in medical, where I see enormous potential in medical to do that. But I'm super excited because I think we're only just starting to crack the potential of how blockchain can be applied in so many things. And as I talked about, perhaps the most exciting thing is when you knit it together with a whole lot of other technologies, I think, and particularly AI, that it becomes a really, really great tool to be, fixing a lot of the world's big problems that we've spent 30, 40 years trying to work out how to use big data and how to deal with low trust or fraud in a way that can reward good practice, and whether that's environmental or social.
Thanks. It sounds like what you're saying is that many of the things are difficult or haven't been contemplated yet because it's so profound in terms of how they might mix together, and we just haven't really, that we haven't really understood it fully enough to see what's possible.
I also think that the panel were talking earlier about millennials, and I'm super excited about a whole suite of startups that are now taking this and experimenting and coming up with completely different thinking about how to use that. So it's hard to see where that's going to hit the road, but that I think is that connectivity and innovation taking on in Australia and around the world is probably the most exciting thing.
Well, we might ask some questions from some millennials, and even for anyone from the audience of the panel who'd like to ask the first question.
Yeah, thank you so much. Thanks, Karis, for bringing us along. Really appreciate it. What would you recommend as advice for young millennials wanting to get into blockchain? What would you do, kind of a 3-step process to do so?
3 steps. The most wonderful thing about this industry is that the information is free. So I've spent $50,000, $60,000, $70,000 on my undergraduate master's degrees. I got into blockchain 3-4 years ago, and I've spent nothing, and I now have a job for it, right? The community is incredibly strong. The networks are strong. Yes, you'll have influencers, right? But they are a plethora of other people that you can seek, whether it's on Substack, and yes, start paying for content, people. There's good content out there, whether it's on YouTube, whether it's on podcasts. And it's, and I know I've given you some recommendations, as I always do, but I would start there. The information is free. I would then say the space is so big that start outsourcing your brain to someone else. So let me provide an example there. I have a friend that's really deeply, deeply in the NFT world, right? I'm in it, but not 24 hours a day like he is. So I've got someone really close next to me that I can talk to in that space. I got someone who I can speak to about investments. I got someone else I can speak to about decentralized finance, right? And so you create your own community, or you create the community online as well. So learn for yourself, create your community, and then just do it. Like, just go out and yes, there's rug pulls. Yes, there's, these crazy coins that you can invest in, but my gosh, you will learn so quickly and you won't make the same mistake again.
Thank you.
Hi, it's Andrew here. I had a question about Dermot and actually any of the other panellists that could explain a bit more about some of the AI meet blockchain applications, a bit more about how that might work for fish species or wild species or other applications. Just a bit more detail about AI plus blockchain.
Okay. So look, I think that if I take the example of Patagonia 2 Fish, where we use a suite of sensing data and remote data to be able to tell exactly where the boat is in the Southern Oceans, and to be able to know with 99.9% accuracy whether the boat is cruising or is fishing. And so you can tell exactly if they're fishing in an area that the government they have a license for. If they're not, or if they're traveling through an area which they shouldn't be fishing, you can tell exactly. Now the AI piece can pull all that together and learn as it goes. So for example, one of the boats had a major engine failure last year. Its profile as a boat had been on the blockchain, and they use AI to track all its data. Once it had a bigger engine, it behaved very differently. The AI can learn very quickly and start to then say, well, actually, the boat is behaving differently, but it's still not fishing or is fishing in any particular pace. And so that type of machine learning makes verification so much cheaper than having someone look at it and go, well, why is it behaving differently? And the type of paper and auditing process that used to go to try and check that. So that's a little example, but I think the potential to do this so much faster and to learn as you go is really important.
That's quite illuminating. Thank you, Dermot, and thank you to your puppy.
I think I've got just a follow-up question, which is directly related to that.
Yes.
So basically, the WWF acts as the auditor as you track that supply chain.
Dermot's shaking his head. It doesn't sound like that.
No. So this is the OpenSC platform using AI and using blockchain to do the digital twinning process, does everything. Now you have to then set the parameters. Sorry, I have a little puppy here who's a little upset I'm online too much today.
Do you want to pick him up?
So you have to understand what are the definitions of sustainability you're trying to solve for, whether that's environmental or social. And then that's so we've got 30, 40 years of experience of that, but actually this is where the technology starts to automate this whole process, which is one of the problems that we've had over the last 30 years, where paper-based supply chain of custody has been a barrier to going to scale, particularly in developing countries with small-scale producers.
Thank you. Thanks. Yes.
Hello, my name's Mo. Thanks for having me here. It's so good to hear from people so close to the coalface about what's happening in this space. Karis, you spoke about all the hoops you had to jump through just to go from one coin to another to, centralized exchange to a decentralized exchange. And I mean, I've found very similar challenges, but being tech savvy and maybe also a bit close to the coalface, I haven't really found it an obstacle or a barrier. But I've got, friends who are millennials who work in investment banking, or they might work in tech. And also, parents or siblings who are a bit older who are really finding that to be challenging. What are some of the things that are being done at the moment to try and interface with centralised, exchanges or on rails, on ramps to facilitate some of this cross blockchain interaction?
Yeah, I think there's some pieces around. We're seeing institutions starting to get interested in this space as well. We saw SocGen, the third largest bank, go to make a DAO and ask for a loan from there, which is incredibly interesting. We've seen thousands of fintechs come on board to this space. And of course, naturally, we've seen Combank and Gemini come into this space as well. This is pre.com, right? Like, this is early days for us. When you're in this space, like, you completely forget until you go and explain it to a friend or you explain it to your mum or something along those lines. So it will, I think, the CX, the client experience, will continue to improve. I actually think when we think about the broader question of what is the future of blockchain, I think, like, personally, this is just my view, we'll probably get to a space where individuals won't care or know if it's BTC or ETH, the same way when people visit a website now, they don't know it's TCP/IP. So I think we will eventually get to the space where you won't even know.
As sort of a happy medium between decentralised and centralised platforms as well?
I feel like I was just, exactly the same. And I think you won't even know that you're using a MetaMask. So all of that will be gone. So you won't even know you're interacting with your MetaMask, and it'll all be done through different apps. So I think we're still, like you said, so early. Eventually, it'll all be done behind the scenes and you won't even know you're making that transaction anymore. I still think we're a couple of years away from that.
To be honest, that vision of we're not even going to know that we're using MetaMask, that scares me. That doesn't relieve me at all, just because the idea of blockchain is that you do have custody of your assets. And when I was moving from Russia to Australia, I had money in my bank account. I couldn't actually transfer money to my Australian bank account because Russia had financial control, so I had to jump through all these hoops. I really don't like that. I've had experience of that. I don't want my money to be somewhere where someone, can freeze an account. Right now, when hacks occur, scams occur, projects can contact Binance and Coinbase and say, freeze that person's account, or they can contact USDC, USDT. So, most people are not going to be affected by that, but let's say someone doesn't like you, well, they can just remove all funds from your account. It's no different than having money, in a Cyprus bank, which I think a few years ago, Cyprus just decided to tax everyone who had more than $100,000 in their account. You woke up this morning and you're like, oh, I don't have my money. So I love the idea of actually having custody, of having MetaMask or having NanoLedger, and just learning how to use it. And the front end did get a lot better. I taught probably 10 people, just my neighbors and friends who've never used MetaMask, to use it. It doesn't take very long. It's like 20 minutes. Everyone gets it. And that's people who go from zero to that. And I would much rather see the space evolve in terms of education and getting the decentralized tools to be easy and beautiful, rather than all of us just having your email and your password and just log in anywhere. I think people do need to learn how to store seed phrases and how to keep their private keys. And that's just
it'll be the interface, won't it? It'll be making that interface easier.
Yeah, let me rephrase. I think decentralized finance has an absolute place in the future, right? And I think our generation that has been through a GFC, Royal Commission, enforceable undertaking, future financial advice, we are unfortunately losing trust a little bit in our institutions, and we are moving to consensus mechanisms, right, or trustless mechanisms. I think the people who want to will be able to be their own bank, and it will just look a little bit prettier and it will be just a little bit easier. Yeah.
Great.
I think we've got 10 more minutes for questions.
Yeah.
This gentleman here.
Thank you. Yeah, great.
Okay, so I have an NFT related question, and this is because I'm operating inside the Apple ecosystem, where it's very difficult to pay for digital assets other than doing it through Apple's in-app purchases. You can have a game-like internal currency, but you can't actually use crypto to buy your own assets. So this is about plausibility. Do you think you can offer NFT-style operations within that kind of environment and still be plausible?
I think the interesting thing about Apple, right, compared to, let's say, OpenSea, so OpenSea will take 2.5%, right? And in my world, in Discord, we jump up and down about that, how that is outrageous. You go to Apple, 30%. You go to YouTube, 50%, they're going to charge you. That's ridiculous. So I think the likes of Apple and so forth, you know, these non-founder-led companies are potentially in trouble, right? If they're not listening to users, if they're not listening to what we need. So I would be very interested to see, as the user experience becomes easier, people shifting away from these either operation systems or where they buy them.
Great.
Yeah, hello. Prashant, founder of Indian Australian Technology Forum. I just want to shift some focus on, we talked about the positivity and we talked about some challenges as well. I'm using the word government and regulation, and also cybersecurity, and we touched on sustainability as well. So I'll give you some flavors of the changes, like the volatility is huge in the market, and sometimes, depends upon which side of the bed Elon Musk wakes up and tweets, the market goes up and down and sideways. That's a really big challenge as well in terms of investment. And also regulation, because we've seen a lot of cyber attacks, especially during COVID-19 period, where ransomware and Bitcoin is a mechanism, and counterterrorism, all those things, and black money, and a lot of things are happening, which is funded and fueled by using Bitcoin and blockchain technology. And the regulation is minimal as well in this space. And just give it some flavors of regulation is in India, there's a regulation coming this side of the parliament sitting. We're talking about the investors in India are 5 times the size of USA. We're talking 100 million people. So if something shifts there and government puts a prohibition or blanket ban on certain chains, blockchain technology or Bitcoin, the market goes up and down. So huge challenge, huge volatility. How we can impart trust and educate people when there's all these kind of challenges that you are facing at the moment?
Who'd like to answer that? Tracy?
Yeah, I think, look, we're always going to get this about Bitcoin and, volatility. And to my mind, we look at the volatility that's happened in the last 4 or 5 days and the drop we've had here. That's nothing on what we've had in previous years. So I think the volatility is kind of, petering out from what we've had in the past. But when we talk about regulation, and, Binance might, have different things to say here, but we welcome a little bit of regulation. I think that the government and the banks will slowly come on board, and then we will see regulation, but I guess we need that. We need some sort of regulation to come on board. And I think depends, what does that look like? We don't know. We don't know what that regulation will look like. It's going to be different in every country. But when it comes down to, these terrorist attacks, and you talk about ransom and that kind of thing. We had a conference a few weeks ago where we sat down with this gentleman who was he was Magnum PI. He actually was someone who would track down where money had gone, and it was actually a very big name company here in Perth who had a big ransom note, basically, and they tracked it down. And that's the thing with the blockchain. You can actually, put some money out there, you can ask for these big ransom, and then this Magnum PI tracked it all the way through, and this had been bounced all over the place, but that money needs to come out somewhere. So he tracked it out, and this money came out the other end, and they got it back. So that's the one good thing about the transparency here. So that's 2 issues. If we look at, the money laundering and that side of things, that's been around for a long time. It's not going anywhere, and it's been the same with many different industries. And as far as the regulation goes, I know that, there are a lot of us that welcome it, not too heavy, but I think that we need some sort of regulation. And I think when we look at where the market is going, if we step back for a minute and look at 10 years ago when Satoshi did the white paper, and we're all here talking about Bitcoin and blockchain, and that started out as a peer-to-peer cash transfer, which we're not even using Bitcoin for at this point in time. So what this set out to be 10 years ago is nothing that it is as we sit here right now. And all these other extra things have happened. We've spoken about DeFi, we're talking about, sustainability with fish. We didn't even really touch too much on Web3. So I think where we've come from to where we're going, it's endless. There's so many things going on. I've kind of gone off topic a bit for you there, but just rounding it out nicely.
Well, I think that, it's probably no accident that the global financial crisis coincided with Satoshi writing his white paper when there was such a crisis in trust in our institutions, and that born out of that came the innovation that did not require it. Yeah.
It actually makes our lives incredibly difficult when we don't have clear legislation and regulation in our industry, as you can imagine. So the recommendations that were made to Senate with Andrew Bragg about a month ago, we welcome those, and thankfully a lot of us in the industry actually had an opportunity to put forward our ideas. But it does make our lives more difficult the more grey it is. But we also have to remember that, regulators are very used to going, hey, here's the institution, let's put a ring around this and provide legislation here, and in returns, we'll give you monopoly over the market and we'll increase the entry to barrier. And so now with crypto, NFT, DeFi, that flips it on its head, and all of a sudden we've got regulators trying to figure out what on earth to do.
We've got time for 2 more questions, and then we will reconvene drinks at the bar.
Okay.
Sir?
Hello, everyone. Thank you for tonight. And my name's Ashley. Just want to ask a quick question. How easy or difficult is it to change a service, not necessarily a currency, from one blockchain to another? And how many people do you annoy when you do that?
Well, Anya, maybe
And
you'd like
Powerledger, yes, that's a good...
So I've recently hopped from Arbitrum to Optimism. That took like half a second, super easy, nothing to do. And then going from Ethereum to Solana, for example, using the wormhole bridge. I mean, that's been like 3 days of pain. And the only way you know you're progressing in that process is because you get a new error message that you haven't seen before. And then you go, oh, yeah, right, okay. And then you start using a different browser. And then that browser doesn't like the Nano Ledger. So then you have to... So the blockchains that are highly compatible, it's really easy. And the blockchains that are quite different in design, I think it's a lot harder. And basically, I'm not sure if your question comes from practical consideration of you just trying to do...
Business-wise, and the effect it would have, could Bitcoin move to a different blockchain, for example?
You can wrap Bitcoin and represent it, for example, as an ERC20 token on Ethereum, and maybe you... Really, what you're getting is not Bitcoin. You're getting an instrument that is collateralized by Bitcoin on the Bitcoin chain, but you can then use this instrument in different... You can, for example, lend it to people and earn an interest on that.
But you're not moving away from the underlying proof of work.
So and you are relying... There is another point of failure all of a sudden, which is the bridge. So someone's built that bridge, someone's audited the code, because what the bridge is doing is it's locking up the funds on one chain and then giving you something that you think is going to allow you to unlock those funds and get them back. But let's say if it's a more centralized bridge, or if there is issues in the code, that bridge could be hacked and all the funds that are being held by that contract in escrow could be hacked. You just introduce another point of failure, so you've got to consider why you're actually doing that. So that's from a user point of view. In terms of the company, companies could switch out underlying blockchains depending on the needs. So for example, Powerledger has transitioned from Ethereum-based to Solana-based because it's a much faster blockchain, but all the architecture, software architecture, and functionality we've built on top still sits there. We've just transitioned that, and we now utilize in a faster blockchain.
Great. Final question for the evening.
Oh, final one. Firstly, thank you so much for sharing all your insights. Just loving the energy on this panel. I wanted to talk a little bit about Powerledger, actually, and going back to the first time I heard about Powerledger and what you were doing in White Gum Valley to support that development. So I'd love to hear a little bit more about where that's come on sort of the local scale, because we've talked a lot about global scale.
Sure. That was not a plant, that question.
Totally not.
Well, the White Gum Valley project, WGV, is still live. So the Powerledger platform's being used in 3 apartment buildings. And we also have a 670 kilowatt hour battery that is part of the East Village project in Fremantle, so a 4th project. There's 36 homes that will all have solar that will trade with each other via the battery. And then there's an adjacent development by OP Properties called Montreal Commons, which has just turned soil last week. So that's also going to be using the Powerledger platform and also storing surplus solar from that apartment building in the battery across the grid. and that same battery will be used to provide grid stabilisation services as well. So I'd say that project started off as just the Gen Y housing development and has spread tentacles and is becoming a little local energy market, which is very exciting. And I'd say in terms of our thinking and philosophy, we've seen like the concept of peer-to-peer trading seen as like a kind of financial trading of energy, not really linked to the actual energy grid, but that the ideas around that have really matured, and I'd say the more considered view now is that local energy markets using blockchain and peer-to-peer trading of energy are now intimately linked to what's going on in the grid. And what I mean by that is the local energy market is designed to reduce grid export during the day and reduce grid import at night, i.e. assist in balancing supply and demand on the grid. And that is a way that more renewables can be incorporated in the grid without having to charge to export or curtail solar, which is a fancy word for throwing energy away. And I think the idea of centralised energy markets and blunt price signals like feed-in tariffs were very good for putting 1%, 2%, 3% energy into a grid. But what you see around the world, that once you get above double-digit percentages of renewable energy in a system through centralised price signals, like blunt price signals, is that you start to get grid congestion and a lot more spend on networks and very high electricity costs overall. So there's a strong relationship now between high penetration of variable renewable energy and high electricity costs. And it's not, as we want to get to net zero and 100% renewables, it's going to become prohibitively expensive, that model. And so I think that distributed energy paradigm and decentralised energy paradigm is going to become increasingly important as we get more renewables in our system. And we've got a project in New South Wales working with Transgrid and Endeavour Energy, which is going to be demonstrating that use case, how to avoid having to upgrade substations and transformers by creating local energy markets and drive greater adoption of renewable energy. So I'd say, in summary, the Fremantle project is alive and well and growing, and also spawning many other versions of itself around Australia and the world. We've now got more than 20 clients in 10 countries.
Love it, thank you.
My pleasure. I'd just like to thank my esteemed panel for joining us this evening. Thank you for your really inspired contributions and lively discussion. I've really enjoyed hearing, and I've got a lot more questions to ask you later on. I'm sure the audience has too. So please join me in thanking our panellists this evening. And on behalf of Powerledger, thank you so much for coming this evening, and please join us at the bar for a drink and further conversation.